afternoon, everyone.
The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. My name is Andrew Dean from ATMIA. I see we've got quite a few people that have joined us already, and thank you so much for joining us this afternoon. I'm going to just, first of all, start by giving a bit of an overview of ATMIA, and then we'll introduce you to our guest speaker for today. First of all, I hope everybody's keeping well and safe, and again, thank you for taking the time to join us this afternoon on this interesting topic. Before we start, I'm going to be going over a few housekeeping items. You will see there's a dashboard on your right-hand side, and then we will also be previewing the presentation. If you can't hear the quality well and you're on VoIP, please feel free. There are dial-in numbers with a webinar access code and audio PIN. Attendees are in listen-only mode, so you won't be able to ask questions verbally. However, there is a questions area on your dashboard. Please feel free to submit questions during the webinar, and if you we will then see at the end of the presentation, or possibly during the presentation, if we can handle some of them as they come in. But either way, if we aren't able to get through the questions during the webinar, we will at least respond to everybody post the webinar with giving you feedback either on references to more information or to directly address any questions that you have based on the topic that we're going to be sharing today. As I mentioned as well, we will be recording the webinar, so we will then also send a link to everybody that has attended and registered for today to be able to share or view the webinar. Just quickly to touch on ATMIA, we are the ATM Industry Association. We have approximately 11,000 international members in over 65 countries. Our purpose is to do information sharing and to share best practices, and also advocacy work that we do within the retail banking and ATM and payments sectors, and then of course also supporting networking. We are busy with a next generation ATM initiative, which is looking at the evolution of ATMs in open banking and in interoperability and additional functionality for cross-channel interaction within the ATMs. That's a global initiative where all the major ATM manufacturers and all the major ATM deployers are involved. If anybody's interested in that, please feel free to reach out to me. And then we also involved with a ATM hygiene and health initiative, of course, in the context of COVID and its impact on all of us. I'm the Executive Director for ATMIA for Africa and the Middle East. I also run a company called Calio, which focuses on market intelligence in Africa and the Middle East for the banking and payment sector. And I'm also the founder of Payments Africa, which is a new site focusing on the payment sector within Africa. ATMIA, we have a collaboration agreement with Cenfri, which is the Center for Financial Regulation and Inclusion. Cenfri focuses on questions such as what is the role of the financial sector and financial services in society, how can financial services improve people's lives, and how can our financial systems change to improve the role of financial services in society. Today, we're going to be hearing from Cenfri on the current pain points regarding to digital identification and authentication on the continent, and then what role do proxy IDs play in overcoming some of these gaps. And we're joined by Matthew Ferreira, who's an associate at Cenfri, and Barry Cooper, who's a technical director at Cenfri. Matthew and Barry, thank you very much for joining us today and for making your time available and for being willing to share this information with us. And then I'm going to hand over to Matthew. Thank you so much. And Matthew, as I mentioned, please just feel free to let us know when you'd like us to move over to the next slide. But over to you. Thanks, Matthew.
Perfect. Thanks so much, Andrew. I would just reiterate, I hope everyone's keeping safe, and from our side, just really grateful and excited for the opportunity to present on what is really interesting research and particularly relevant in the current times. So you can move to the next slide. Yeah, so I mean, I think you gave a great overview, Andrew, of what Cenfri does, but what we are primarily interested in is trying to essentially shape markets in a way that benefits people and that results in economic development. And how we do this is basically by primarily conducting research, and then we use that research to try and influence stakeholders and to try and shape markets in a way that ultimately makes them work much better. So this presentation is where we've been looking at the role of digital ID and how this can potentially shape society and how it can be used to overcome pain points across, for a particular study, we looked at South Africa, but also looking across Africa. So the objective of this presentation is to explore the role of ID proxies in overcoming some of the pain points in African economies. And how I'll take you through this is I'll start by chatting about the problem statement in the context of COVID-19. What are the digital ID pain points in Africa? Then we'll look at what proxy identity actually is and how it can potentially address the pain points in Africa. And after I've gone through this kind of conceptual framework, I will take you over the study that Cenfri undertook on behalf of Bank of Africa, where we looked at different proxy IDs globally to see which ones could be appropriate in South Africa. And I will also add in a few examples of some current other case studies that weren't part of the study, but we've come across recently, which are quite interesting. You can move to the next slide. Sorry, the next one as well. Okay, so the first pain point I'd like to point out is that of financial exclusion as a result of lack of documentation. So the World Bank estimates that as many as 1 billion people globally lack access to a legal or official proof of identity. And almost half of those people are residing in sub-Saharan Africa. So what this graph shows is the percentage of financially excluded adults who said that the reason they were financially excluded is due to a lack of documentation. So I think this is quite a powerful figure, especially when you consider that in some countries it's almost 50%, or it is in the case of Madagascar, it's 50%, Zimbabwe 49% of the financially excluded note that they're excluded due to a lack of documentation. And I think across many countries in Africa, this is quite a big problem. So you can move to the next slide. You can move to the next slide. Thank you. No, the previous one, if you can just go back one. There we go, there we go. Okay, so the next issue I want to highlight is that of underdeveloped identity systems in Africa. So in research that Cenfri conducted in 2018 on biometric identity systems, we noticed that identity systems in Africa tend to be set up in what we would call a siloed fashion, where they're established for very specific use cases, and they're not well integrated into the economy or into other identification systems within the economy. So if you look at the diagram on the left, this is essentially a database connected to a use case. The numbering here just refers to use case number 1, use case number 2, 3, and 4. And how digital identity systems typically become sustainable in the long term is by having a lot of verification requests and being linked to a lot of use cases. So on the right, you have a much more functional identity system that's linked to quite a few different use cases and is therefore sustainable and functional. Whereas the ones on the left are not always, in some cases they can be funded, but what we've noticed is that a lot of them are not necessarily sustainable because they're only developed for one specific use case and are not well connected to other identity systems within their context. So you can move to the next slide. And then building on that is there's a scope for more functionality within payment systems, and this is linked to the above, but how we integrate digital identity and identity systems into different economic functions like payment systems, payment services, etc. So For example, in order to make a P2P payment, you still would typically need to know the bank account details of the recipient, which can be quite a tedious task to make that payment. And same, if I need someone to make a payment to me, I'd have to go and find whatever my bank account details are and send that information to the person. And then, for example, I think there's still a lot more opportunity for functionality in the way we integrate, like card payments. I think you can tap your NFC chip on your bank card at a POS device, but you still currently would need to, if I understand correctly, you'd still need to punch in your ATM, your PIN code. So there's still opportunity to further development and develop that and make it contactless. And then in terms of KYC, for example, it's also largely a manual process where you have to bring your ID document, you might have to bring your proof of address, your proof of income. And there's really scope for us to digitize these processes and make them a lot more convenient, more functional, which helps the consumer. It's much more convenient for them, but also helps the banks, for example, in KYC processes where they can make the process much more efficient and less costly, and just helps the movement of money through the economy much more efficiently. So you can move to the next slide. So just to bring COVID-19 into the spotlight here, and how the issues here relate to the ones we've discussed, there's two major things we're noticing. It's firstly a heightened need for efficient, reliable payment mechanisms that can facilitate contactless and convenient transactions in an instant and affordable way. So obviously with the need for social distancing and reducing contact, it's become even more important now to try and implement payment systems that can achieve this. And then secondly, there's also a heightened need for secure identity systems that are resistant to identity fraud. So obviously with a lot of social relief programs being rolled out and social grant systems, specifically in relation to COVID, we're seeing globally people trying to take advantage of this by creating fraudulent identities, enrolling fraudulent identities on different identity systems to receive these grants when they're not actually supposed to, and actually, assuming someone else's identity in order to get the benefits of the grant. So I think that just points to the need for accurate payment systems that ensure that they pay the correct person and that the money goes to the person who needs it the most. So you can move to the next slide. Okay, so now I want to discuss what proxy identity is and how it can potentially address some of these pain points in Africa. So I would like to start by explaining the concept of identity. So identity is a collection of attributes about an individual or legal entity that can be distinguished as unique to that person or entity. So you can have different factors of identity. So you have something a person knows, something a person has, and something a person is. So something you know is, for example, your password or PIN. Something you have is an identity document, proof of address, bank card, and then something you are, that's your biometrics. So within each of those blocks, those are like identifiers. So an identity document could be understood as an identifier. A proof of address is an identifier, and similar to a passport. So if your identity has 3 identifiers, you could have 3 of those documents, then you'd have 3 identifiers within your identity. However, the more factors you have in your identity, the more robust it is. So it's generally better to have something you know combined with something you have, and ideally combined with your biometrics. That would make a 3-factor identity. So I think in summary, the more identifiers and the more factors, the more robust the identity is. You can move to the next slide. So when some or all of these attributes are captured and stored digitally, this is when we have what is understood as digital identity. And when this identity carries a legal status, which is usually issued by governments to their citizens, then this is a legal or otherwise known as official identity. So an example of a digital identity is just a combination of those factors or attributes in the previous slide, but stored on a digital database. Even your Facebook profile, for example, is a digital identity, however robust that is. And then foundational identity is what is generally referred to as the legal identity in a country, although this is not always the case, but this is generally understood as the most robust identity that a person has. And in most cases, this is the legal identity or official identity in the country. For example, in South Africa, that would be your national identity card. Okay, you can move to the next slide. So how do ID proxies fit in here? So what you're looking at here is an ID proxy stack. The base block there is the national identity document, for example. So this could be the legal or foundational identity. And linked to this is a number of different identifiers, such as email address, QR code, NFC technology, a mobile phone number, and biometric identification. So when these are all combined and put together under one digital identity profile, we have a proxy stack. And what's important to note here is that although, for example, an email address is just one identifier, if it's used as the primary means of identifying a person, then it becomes the ID proxy. So as an example, if when I want to make a payment, I make a payment to a person's email address rather than their bank account number, assuming that the bank account number here is the foundational ID, then the email address is essentially acting as the proxy ID in that case. So that's just to distinguish between identifiers and when something becomes the proxy ID. You can move to the next slide. So yeah, we've tried to think about how I can categorize the ways that proxy ID can help solve some of the challenges that we're seeing in digital ID in Africa. So the first important thing to notice is that proxy IDs, by nature of being additional identifiers and the way they're linked, enhances the robustness of identities. So this obviously reduces the opportunity for identity fraud because there's a lot of different layers to go through in order to assume someone's identity, and the identity becomes much more robust. And what this results in as well is more efficient G2P payments. And I'm going to go over an example a bit later of how some governments are doing this. But by having much more certainty of who the person is that you're paying and ensuring that you're paying the right person, it creates opportunities for much more efficiency in G2P payments. So then the second one is to create an identity by linking proxy identifiers. Now, even for people without a base identity or foundational identity document, it can be possible to start linking different identifiers that they do have together, such as a social media profile, a mobile phone number. It could even be GPS data location, but ultimately, if you can start painting a picture by linking different proxy identifiers, it's possible to start creating identity for people who lack foundational identity. And then just referring to the issue I spoke about earlier on disparate or siloed databases, proxy IDs also create the opportunity to try and link some of the information in these databases and create single profiles for people that can become more robust digital identities. And then finally, just to note that, of course, the very important function, which is to improve the functionality of identities and how they're used in the economy. So this obviously can result in much faster, more convenient payments and better onboarding or eKYC processes. So obviously, being the objective of Cenfri, we think about, if I had to summarize the way that this would improve the economy, we're looking at economic inclusion, more robust and functional identity in Africa to help people obtain services, and reactive, fast support in times of crisis. So you can move to the next slide. So now I'm going to take you through the study that we undertook on behalf of BankServe Africa where we took a view on different case studies of proxy IDs that were being used in practice. And the idea here was for us to try and understand what were some of the kind of advantages and disadvantages to these different proxy IDs, and how we can use the information we've learned to think about implementing a proxy system for real-time payments within the South African context. So in terms of the approach, we used a global case study approach. Our research method was desktop research combined with stakeholder interviews. And we used a set of criteria to assess these proxies. So we looked at the accessibility. So how easy is it for the population to get access to this proxy ID? Because obviously that's important in determining whether it would be scalable and or whether it would be exclusionary. Then verifiability. So is there a secondary way to verify the proxy, and how do we verify that the person is who they say that they are? And then we looked at trust as well. So we also looked at implementation, cost, and infrastructure requirements. However, I'm not going to touch on every one of these individual factors that we looked on. As I go through each case study now, I'll provide a high-level overview of sort of what the major findings were and advantages and disadvantages. Okay, so you can move to the next slide. So we looked at 5 proxies across 9 different case studies. These were chosen based on the uniqueness of the model and the distinctive use case. So the proxies evaluated were biometric identification. So this is Nigeria's bank verification number, otherwise called the BVN, as well as India's Aadhaar. We looked at mobile phone number. Here we looked at MTN MomoPay, EU TIPS, and Mexico's interbank electronic payment system. And we also looked at the email proxy, where we looked at Google Pay and Australia's Pay ID. We also looked at QR code, which was also Mexico's Cody app, and near-field technology. So I am going over all of these briefly, except for the Mexico interbank system. I just think for the case of time, I won't be able to go over all of them. And I will also take you through 2 examples of how these proxies are being used in COVID response, as I mentioned earlier. So the first case study I'll cover is Aadhaar. So I'm sure many of the listeners may know quite a lot about Aadhaar, but this is essentially a it's a countrywide digital ID system that was established by the Indian government in, I believe, 2012. So this is a 12-digit random number that's tied to an individual's biometric and demographic information. So in terms of biometrics, it's, I think, fingerprint, iris, and facial recognition. And how it works is that essentially individuals can use their biometric to access payment services and access different services across the economy. So you can go to an ATM and you can input your biometric and your Aadhaar number, and then you can get access to the ATM and the various services. You can also make payments using your mobile phone directly to a Aadhaar number, which there acts as the proxy to the bank account number. So it just makes it a lot easier for people when they can simply pay an Aadhaar number, or they can use their Aadhaar number and their biometric to gain access to different services. Another thing is the eKYC process, which is really interesting. So if you have an Aadhaar number, you can go to a financial service provider and just provide your number and your biometric, and the FSP is able to link your number to the corresponding central input on the corresponding central database and pre-populate all of the KYC forms. So simply by pulling the information from the database, which has a lot of robust information that's necessary for the KYC process. So this essentially automates and digitalizes the KYC process, and it's really convenient for consumers, but also it actually decreases costs for FSPs. So in terms of the accessibility of this, we note that it has a high accessibility because it's a countrywide initiative. So I think almost everyone has an Aadhaar number by now. In terms of verifiability, your biometrics don't change, so it's immutable, and it's verified against a central database. So there are strong verification processes in place. The only thing I would highlight about ADHA as a potential issue is there's some trust issues with ADHA. I think in recent years, there have been quite a few issues around privacy breaches, hacks or breaches in databases, and people not really trusting the system. What's interesting to note here is that the privacy legislation in India was only implemented after the whole ADHA system itself was implemented. And it's interesting to note that public buy-in to ADHA maybe is not as significant as it needed to be for this to be a complete success and to have not had some of the issues that it's run into. So if you move to the next one. So the bank verification number, or BVN, this is a 12-digit identification number for the financial sector in Nigeria. That includes biometrics, which include also your fingerprints, your iris and facial recognition. This is similar to ADHA, except it's a sectoral identity initiative that was spearheaded by the Central Bank of Nigeria. So how this essentially works is similarly to ADHA. You can use your fingerprint to access different services such as ATMs and payments. But what's really interesting here about ADHA is that the intention is for every person within the financial sector or with a bank account to have an ADHA number. So you could have multiple different bank accounts in Nigeria, but each one of them would link to your BVN number and your corresponding biometric information. So BVN here is actually acting as the foundational ID underpinning your various other proxy IDs like bank account number and your mobile phone number, which you can tie to it as well. It's really great for monitoring fraud and suspicious transaction reports for the banking sector because they are quite clearly able to identify and link different accounts to specific people. In terms of its verifiability, it's immutable. Your biometrics don't change. And again, the first step verification is against a centralized database. One thing that's important to note here is that the BVN has been quite successful, and I believe that most people within the financial sector have now been enrolled with BVN because of the way it was spearheaded by the central bank. And they required financial service providers to enroll their customer base on BVN. So the financial service providers had to get the various equipment and actually enroll their customers on the system. And they set different targets and timelines for when these enrollments needed to be done. So this kind of coordination and backing from the central bank really helped in the success of BVN. The only issue here, and while I feel that BVN is quite a good example of a success, it's just lack of consumer awareness. So what we found from the research is that some people aren't really aware of how to use it, and again, they don't like their biometric information being stored on databases due to the fact that it's sensitive information. So you can move to the next one. So moving on to the mobile proxy case study. So this is the Target Instant Payment Settlement Service, which is a real-time retail payments mechanism established by the European Central Bank in November 2018. So this system runs on the Target 2, it runs on the Europe's RTGS system, and it's just a real-time instant payments mechanism. So how it works here is that mobile phone numbers have been linked to international banking numbers, and that allows people to make payments to a phone number rather than having to know the bank account number. So as per the diagram, if you wanted to make a payment here, you would initiate the payment request to your payment service provider, and then they would do a lookup against a central database, a mobile proxy lookup system, which would confirm, which would link the international banking number to the mobile number provided, and then feed this information back to the PSP. And then you'd have the opportunity to confirm whether you want to go ahead with the payment, and then the payment is executed. So this has high accessibility because there's high mobile phone penetration across Europe. It's verifiable against a central database, which is linking international banking numbers with mobile phone numbers. And in terms of trust, it's ensured by strict compliance with GDPR. So I think the interesting thing to highlight here is that from our research, we noted that there hasn't really been high uptake of this service. And one of the key reasons is that there's no requirement for banks to actually adopt this service, and they need to integrate it into their specific banking apps. So some of them haven't done this, or others have done it in ways that are not so obvious to the consumer. So they aren't necessarily using the service, either because consumers are not aware of it, or it hasn't really been marketed that much. So the service is there, but it's not been adopted by all the banks yet, and it hasn't maybe had the success that it could. So you can move to the next one. I want to take an opportunity here to quickly talk about prompt pay, which is something that I actually came across recently. So prompt pay is a system for money transfer in Thailand that links identity numbers or mobile phone numbers with bank accounts. So this is a similar initiative to what I've just described. But the Bank of Thailand, it began as part of Bank of Thailand's e-payment initiative, moving the country towards electronic money. So roughly 3 million temporary employees, contract employees, and self-employed individuals are receiving money between April and June 2020 as a specific response to the economic impact of COVID. And instead of cash handouts, citizens are able to receive the money via prompt pay. So the government is directing payments to the prompt pay proxy ID, so the mobile number that you've provided. And by having this database of linked bank account numbers to mobile numbers, they're able to quite easily and quickly disperse really important funds to the people that are needing it in this difficult time. You can move to the next one. So the next case study I'll cover, the next proxy I'll cover is QR code. So here we're looking at a payment application called Cody, developed by the Mexican Central Bank. So this is essentially a request to pull service enabled by QR on an app to facilitate instant small value P2B, or actually P2B payments. So how it works is a person, if you need to receive a payment from someone, you generate a QR code and send that QR code to the person via email or via phone, and then they would be able to scan that code and make the payment. So it can also, in terms of businesses, they can simply receive a static or a variable QR code, and they can use that at their place of business. And if consumers want to buy things, they can quite easily just scan the code. So in terms of accessibility of QR codes, they're quite widely accessible, but the only issue is you require a smartphone and an internet connection to make use of them. In terms of verifiability, the merchant information is embedded in the codes, and there's a multi-step verification process required, so there is two-step verification. The only issue here is that static QR codes can come, if they get stolen, then there's an issue there, because then you can start making payments or receiving payments via the stolen QR code. Yeah, you can move to the next one. So here's another interesting example where I see that, and I came across this recently as well, where Ghana Interbank settlement systems launched a universal QR code, and merchants are able to then use to put this QR code up at their place of business, and consumers can simply scan the code to make a payment. So this is obviously great because of how it incentivizes contactless payments, and the merchants can receive payments from various different from bank accounts, mobile money wallets, e-switch accounts, and cards. So this is also a great initiative of the Ghanaian settlement systems. You can move to the next one. So the next proxy we looked at is NFC technology. And we looked specifically at MomoPay, which is MTN's mobile money service. So here, P2B payments are facilitated by tap and go via NFC tags linked to MTN mobile money accounts. So as a consumer, and if you're enrolled on MTN's mobile money service, you can get an NFC tag for free from the MTN stores. And then wherever a merchant also has the NFC tag to pay for stuff, you can simply go and put your device close to the other NFC tag and execute the payment via mobile money wallet. The only issue here is that it does still require internet connection because the transaction happens via the mobile money network. And it's expensive for MTN to supply these tags and can be a barrier if merchants don't want to incorporate this payment service or don't want to buy the tags. So that was kind of the only issue we encountered with this proxy, as well as the fact that sometimes consumers didn't understand how it worked, so there wasn't that much buy-in into it. You can move to the next one. So moving on to the last proxy that we looked at, which was email addresses. So the first one we looked at was GPay. So this is a payment processing and digital wallet for P2P transfers. How it works is you simply download the GPay app and you register your profile and you link your bank account to your email. And then you can use your email address as the proxy ID. So if you want to make a payment to someone, you can just pay the corresponding email address and it will go through. You can also, this app also takes advantage of, for example, NFC technology. So if a merchant has this technology available, you can make the payment through GPay through NFC technology. In terms of accessibility, obviously GPay is not really available everywhere. So that is a key issue. And there's no verifiability of email addresses because there's no kind of central database of email addresses that are linked to bank accounts. It just sits with each individual bank or institution, but there's no centralized way to actually verify these. There's also, in terms of trust, you can make multiple different email addresses, and we're not really sure who the underlying identity is. But it is important to note that GPay has quite strong fraud protection through tokenization of cards. So when you input your card details, when you're linking your bank account, it creates a tokenized version of that card. And then when you make payments, you actually use the tokenized card. So it does have some really strong security features that are built in. You can move to the next one. So Pay ID. So in Australia, I believe it was in 2018, they developed a new payments platform, which is essentially also an instant payments platform for retail payments. And at the same time, they released Pay ID, which is a proxy ID system where you link your email address to your bank account number, and then that email address, used in exactly the same way as GPay, you can make payments simply to someone's email address. So in terms of accessibility, we found this one from our research. The email addresses are ubiquitous in Australia, and most people keep their email addresses for quite long. So the trust is there. In terms of verifiability, it's institution dependent in terms of how they choose to incorporate into their banking systems. So one interesting thing to note about Pay ID is that it's had quite a bit of success because it was implemented alongside the retail instant payment system. So as opposed to the TRPS system, where the proxy ID system was released as a separate thing and not necessarily marketed alongside it, they've had more success in Australia where this was marketed as one product and brought out at the same time. There was also collaboration between the different stakeholders that were involved. I believe the Central Bank of Australia has a stake in it, but it's actually run by the institutions in Australia. The only issue that they're having here is that I think it's also voluntary for banks to adopt this, and there's a staggered process of banks adopting Pay ID across Australia, and that also does create some issues in terms of adoption. So just to summarize these, if we look at the advantages and disadvantages, in terms of biometrics, your main advantage here is how robust the identifier is. And obviously it's highly accessible because everyone has biometrics. But the main disadvantage is that it's expensive to implement. You have to buy the biometric devices, you have to use them for onboarding, and you also have to use them for the identification and verification processes when people want to access services. In terms of mobile phone number, this is great because there's a high level of accessibility among the population. It's user-friendly, people understand how to use it. But there's fraud and security risks because people sometimes have lots of different mobile phones. Phones can get stolen, people use multiple SIM cards. So it would need verification against other proxies as well. In terms of QR codes, these are unique and robust. So a QR code is much more advanced than a barcode in that it can store a lot of information. So each QR code is going to be unique as a QR code. And so it's capable of storing large amounts of information. One issue here is that it has high latency to actually make payments. So once you scan something, it can take quite a while to actually execute the payment. And it does lack some strong security features, especially in case of static QR codes. In terms of NFC technology, this is great because there's a really low latency and it's very quick transactions. And these are very secure chips that are very unique. However, you need multiple NFC devices to serve multiple accounts. So the merchant needs one and the user needs one. And at the same time, you need to be physically close to make a payment. You can't be sent a QR code. For example, you have to bring one of the NFC tags close to one of the others. Then in terms of email address, these are user-friendly and obviously more convenient and easy to provide than bank account details. But if looking specifically at Africa, email addresses are not necessarily ubiquitous. So we risk exclusion if this is kind of used as a main proxy. So you can go to the next slide. And that's just a summary of us. And as I said, I wasn't able to go through all of the different criteria that we looked at in assessing these. But here's just an overview of our thinking on how we came to the decision on which proxies should be used. So green obviously being the best color, yellow the next best, and moving towards red. So you can see here the key constraints to things like NFC and biometrics are the cost and infrastructure requirements. With phone, email address, and QR code, it's actually quite accessible and unique. So you can move to the next one. So based on what I've just discussed, I'll take you over our conclusions. So we ultimately recommend a combination of phone numbers that are linked to IMEI numbers, so the phone's physical device number, as well as email address and QR codes. Why do we say this? So phone numbers are highly pervasive and user-friendly. Email addresses are robust and customer-friendly, but would require additional proxy layers to avoid being exclusionary. And QR codes are sufficiently secure, robust, and accessible. There's also a low barrier to uptake for merchants. And as I discussed in the previous slide, NFC and biometrics, so for NFC, the POI devices are acting as a cost barrier. Production and distribution of tags can also be costly. And then with biometrics, there's the costly implementation process. You can move to the next one. A couple of other interesting insights to discuss in terms of prerequisites for deployment. So things we noticed across the case studies is that compulsory participation often had a positive influence on the success of the initiative. So in Nigeria, where participation was compulsory, we see adoption is very high, whereas in the TRPS, the EU real-time payments proxy, where it's voluntary for banks to opt in, it's often not a priority for them. And linked to this is coordination between the different parties that are undertaking the proxy ID and having clear structure and rules. So in Nigeria, as I was discussing, there were specific timelines for implementation and rules around how the payment system would work to provide clarity to participants. And this is just a general consideration in terms of real-time payments as liquidity reserve implications and how this affects treasurer's ability to monitor this is something that needs to be considered. And then we also recommend market research, which is important because each country context is different and each country requires a specific research process to figure out what's the best ID proxy system for that country. You can move to the next one. So I possibly should have just labeled this slide as additional considerations, but just a few extra things to think about is the urgent need for contactless payments in our current environment, and we need to actually rapidly transform towards this, especially that considering we're not sure how long this crisis is going to last. So many different types of proxies exist, but they are most impactful when stacked in SA and the rest of Africa. Context is obviously very important, as I was talking about in the previous slide, understanding the local context and what's going to be the best identity solution for that country. And in that line, diagnostic research and feasibility assessments can help. You can go to the next one. Okay, so I'm going to stop there, and thanks everyone for listening to what turned out to be quite a long presentation, and I'll hand over to you then, Andrew, if there's any questions.
Thank you. Thank you, Matthew. I wanted to just first of all say thank you very much for your presentation. It was really useful. You know, I think you've covered the limited, I suppose, you know, economic and financial inclusion because of the lack of identity authentication. You know, in first of all, your one slide was showing that across the African markets, and then you know, like the way you covered the I suppose the overview of identity proxies and the stack, and then of course, you know, use of a proxy ID, and then proxy IDs solving challenges in digital identification across Africa, which then, you know, and as you said, the importance then of having that, you know, looking at what's appropriate for a specific region, I guess, or territory, is to look at its the contextual situation. And then also I think, you know, beyond the economic and financial inclusion, also the value, you know, within situations where we are dealing with crises. And the case studies, you know, covering the different types of approaches across the different countries. I think what was quite interesting for me there was the I think you mentioned a few times the issues around adoption, you know, in the various markets, and I guess the various approaches. What have you seen people doing to try to stimulate or improve adoption? I suppose that's both on the infrastructure side, you know, on the banking and the or if it's sectoral on the banking side, or but it's also, of course, on the merchant and the end user. What have you seen? Initiatives in terms of trying to improve adoption?
Yeah, so I guess the first thing I would say is, I'm not sure if I mentioned it, but MTN tried to improve adoption by actually supplying the NFC tags for free initially.
Yes.
But our understanding is that that's actually not cost effective, and I believe they may even be moving to QR codes now.
Yes.
But that's one strategy, is to essentially provide the services. And then the other is the way you market it as well. I think, and Barry, you can clarify here, but I believe in the Australian Pay ID case, it was also marketed very well, and there were clear rules and how it would be undertaken. So I think you have to make the consumers aware of the product as well.
Yeah. From the Reserve Bank of Australia's point of view, there was a lot of consumer education and awareness building, both centrally and through the individual institutions, and the institutions themselves were prompted to engage in a large measure of consumer awareness. The only issue there with take up was that it wasn't coordinated, and different institutions came online at different times, so you didn't have this scaling effect of a lot of people on at the same time.
Okay, for rapid adoption. Okay, and then in terms of voluntary or mandatory approaches to adoption, has that been something where you've seen certain governments or even on a sectoral level taking an approach to kind of mandatory? Was ADHA more that way as compared to more voluntary adoption approaches?
Yeah, so ADHA, it was actually, I must check this, but my understanding is that it may not have been enforced that you had to get an ADHA ID. So this was when it was implemented in 2012. But it may have been, but if it wasn't, then there were big incentives around it to ensure that people did choose to go and get an ADHA ID. I think it was linked to certain social grants. For example, you wouldn't receive the social grant if you didn't have an ADHA ID.
Yeah.
And I know that initially the ADHA ID systems were implemented into the payment system, India's payment system. This was initially, I think it was required for individuals with ADHA to link their ADHA ID into the financial system, but actually because of some of the issues around privacy that have been arising, that's actually been changed. And like I said, yeah, there were some issues around there because the adoption, people weren't necessarily ready for this and didn't understand it. So that's kind of, I guess, the con of that kind of approach.
But there were a lot of really good lessons to be learned from that, in that they pushed ahead, but they didn't have the regulatory framework. If they had the regulatory framework and they had pushed ahead, it would have been that much more effective. Particularly, what we learned from that is the ability to give people a store of value, almost with the stroke of a regulatory pen. That was for me that's very, very promising, although it is a very, very top-down approach.
Okay, yes, I think that's a very important point. That's the regulatory support for the initiative. And then if of course, this is, in terms of payment systems and banking systems, they are very regionally driven, and even if you take, your big issuers or your card associations, etc., even if it's kind of like commercial schemes and everything, they're driven, on a territory or region basis, and the rules and everything change, by territory, by region. Obviously, it would be ideal to have a more universal, broader solutions for digital identification. Are there any like Pan-African digital identity, I guess like SADC, any of the economic zones, like trying to drive something that's broader, or are you seeing or are you seeing mostly that these initiatives, in terms of digital identification and proxies, are driven on a in-country basis? Is that kind of been the experience, and are there any more broader Pan-African or other cross-territory initiatives?
So most of them are country-driven, but there's the WAMU is implementing a regional identity for West Africa. And I believe it's either part of this initiative or it's concurrent, is there's an effort to harmonize the regulation for identity standards across the whole of West Africa. So that's going to help people who have different identities to be able to move across, to access services in different countries, because the identities are developed according to the same standards. So that's the only one I know of in Africa. So definitely it's normally a country-driven initiative, because countries are normally identity, like I was saying, it's normally like this foundational thing that they want to provide, and like foundational national ID. But I think it's really great where these regional initiatives do exist, because it just enhances the potential for regionalization, and
So WAMU is definitely an example of that, but the only country that really subscribes to that standard is Senegal, because it's so difficult to change identities and structures of identities, particularly foundational identities, once they are issued. And that's the big problem, is that the whole model, all these models in different sub-Saharan African countries are based on a centralized issued identity system, which is good, is robust, but in many cases, particularly even biometric systems, they are issued in isolation. They're not part of an ecosystem, and as Matthew correctly pointed out, they are almost single use case or government only use cases. They're not typically integrated as by design into the financial system and into other processes. So they become very, very difficult to maintain, and they are isolated. and they are often very different from each other. So it's not impossible, but it becomes there's a little bit of a hurdle if you want to integrate these things in a Pan-African way. But I think there's fertile ground to do that because it's one continent.
Okay, yeah, that makes sense. And then I suppose if one looks at it, I suppose a payment rail or payment stream or payment channel, I guess they, you know, we were speaking to SADC Banking Association the other day, and they are, you know, opening up, you know, EFT, you know, low value EFT, low value card, etc., and low value mobile. So I suppose then identity verification becomes a discussion within the payment stream itself, and not in a broader you know, identity stack. It's more, I guess, narrow related to transacting on that channel or stream.
Well, when we did the research, we did it with a view to creating either within one jurisdiction, but also to enable it to happen in a Pan-African fashion. And so
Yes.
that the components of the stack would change, but the principle behind the routing of transactions in a routing table or different tables between different corridors would be the same. So as long as you can formulate to put the stack together in a similar protocol, there isn't any major issue for it to be interoperable or ubiquitous across many jurisdictions.
Okay, makes sense. Okay, thank you. Well, gentlemen, thank you very much. I don't know if there's any other questions from the floor. I thought that we covered a nice overview of course, the drivers or what's the problem statement here, the options, and on a generic level, you know, how that proxy stack works. I suppose, you know, some of those the case studies I found very interesting because it gave examples from different territories and different approaches, and of course there's some of the key requirements, Matthew, that you ran through. They were about accessibility, verifiability, and trust. And I think, I don't know if one could argue that one of them is more important than the other. I probably see them as equally important. Because you know, trust is largely, you know, when it's voluntary adoption, that can be a big challenge. Of course, accessibility, you know, if it's not pervasively accessible, and of course, you know, the reliability or verifiability of the data, and then I think, coming to the South African suggestion, which I think is quite important, not so much about, you know, the suggestion around the approach for South Africa, or which means would be better for identity as a proxy or serving as a proxy stack, or sorry, as an identity stack, but also I think your point about which you did mention around context. It was one of my questions, but I think you addressed that towards the end of your presentation, is to understand context within a country, you know, is very important in terms of making recommendations, because that speaks to, you know, what are the different forms of identity within the country, and then how those forms, how adequate are they across those criteria. And you had quite a long list of criteria, an expanded list of criteria in your one presentation. So in closing, we will then get back to all the participants with the recording of the webinar, and then Barry or Matthew, if there's any other reference material. I see you did give your references for the research. If there's any other reference material or any other questions, please feel free to engage directly with Matthew or with Barry, or contact myself, and we can, you know, forward you any other additional resources or information we have. And if you have other problem statements, you know, around this, of course, we represent the ATM industry. You know, it's been used, ATM itself has been used for some level of identity verification and enrollment for like debit check and certain identity authentication mechanisms. But if you have any questions on a more broader level or specific to the ATM sector, please feel free to engage with any of us. And Matthew, thanks again for your time, and Barry, thanks again for all your support and input. I know you played a big role in the research, and I don't know if you have any closing statements, but thanks again, guys.
Yeah, thank you so much from our side for the opportunity to share this research, and yeah, really appreciate it. And thanks to everyone who attended as well.
Yes, thanks everyone, and please keep well and keep safe, and enjoy the rest of the day. Thank you.
Thanks a lot.
Thank you. Bye.
Cheers.